Welcome to The Explainer. Today we're looking at one of the absolute most whiplash-inducing moments in recent financial history. We're talking about a day where shifting geopolitical tectonic plates just triggered a massive explosion of global market activity. So, if you've ever wondered how high-stakes diplomacy connects directly to your retirement account or, the price of goods on store shelves, well, you are definitely in the right place. We're going to map out exactly how a really tense global standoff transformed into this massive financial rally, literally in the blink of an eye.
Seriously, what if I told you that a single signature changed the entire global economy overnight? I know, it sounds like the plot of some Hollywood financial thriller, right? But we aren't talking about a new piece of tech disrupting an industry or a central bank meticulously planning out a policy change for months. No, we're talking about a single diplomatic breakthrough, literally just a few strokes of a pen that commanded trillions of dollars to instantly change direction. It is just a stunning reminder of how incredibly interconnected our modern world truly is.
Now, to really appreciate the whiplash here, we got to rewind just a tiny bit. Just a few days ago, the mood on Wall Street and really in financial capitals all over the world was incredibly grim. Markets were actively bracing for a massive Middle East conflict, and that fear, it was palpable. Investors were terrified of surging oil prices. They were terrified of rising inflation. So cash was just being yanked out of risky assets and hoarded. It was your classic defensive posture because everyone was basically just sitting around waiting for the other shoe to drop.
Section 1. The Fear, the Global Oil Choke Point.
So, to understand the sheer panic that had gripped the markets, we have to look at the map. The entire nightmare scenario centered entirely around the Strait of Hormuz. It's a remarkably narrow waterway, but it is without a doubt the undisputed jugular vein of the global economy. 1/5. That is the massive fraction of the entire world's daily oil supply that travels through that single tiny choke point. If a conflict were to shut that down, even temporarily, the global energy supply would be instantly choked off. And that created a completely terrifying domino effect. On one side, you have the immediate risk, oil prices poised to completely skyrocket well above that psychologically terrifying $100 a barrel mark. And then on the other side, you've got the real-world economic impact. Because look, this isn't just about numbers on a screen, it's about everyday reality. When oil spikes that hard, transportation suddenly becomes astronomically expensive. Businesses instantly pay way more to ship goods, and guess who absorbs that cost? Yeah, the consumers suffer. It meant a massive resurgence of inflation, right when the world thought we were finally beating it. Investors knew this risk intimately, which is exactly why global markets just remained frozen in caution.
Okay, let's dive into this. Section 2. The Breakthrough, an unexpected peace deal.
Because just when the tension was at its absolute peak, the narrative completely flipped. Headlines suddenly flashed across trading terminals worldwide. A U.S. Iran peace framework is reported. Boom. Instantly, that dark cloud hovering over the Middle East began to part. The agonizing fears of a catastrophic supply disruption in the Strait of Hormuz just vanished. And how did traders react? Well, they certainly didn't wait to read the fine print. They began aggressively, heavily selling oil. They dumped crude contracts like they were on fire, and Brent crude absolutely plunged.
And understanding the fundamental logic of why this made the stock market so incredibly happy really comes down to a beautiful three-step chain reaction. Step 1, plunging oil means significantly lower energy prices globally. Step 2, lower energy prices strip away the pressure of rising inflation. And step 3, and guys, this is the holy grail for Wall Street, lower inflation means central banks like the Federal Reserve can actually ease up and lower interest rates sooner rather than later. Cheap borrowing and lower interest rates, that is exactly the fuel that investors absolutely love.
Section 3. Markets Erupt, the Global Domino Effect.
See, the relief from the oil market didn't just stay confined to the oil market. It became an absolute tidal wave of capital. The sheer speed of modern finance is honestly staggering when you look at the timeline here. We go from Phase 1, peak tensions and extreme caution, straight into Phase 2 with the peace framework hitting the wires. Within minutes, Phase 3 kicks in and Brent crude plunges. And then almost simultaneously, Phase 4 happens. Algorithms and human traders alike recognize this changing macro environment, and billions upon billions of dollars that were just hiding out on the sidelines come flooding right back into global equities. It wasn't a slow trickle, it was a fire hose of risk appetite returning. From Europe to Asia to the Americas, within hours, the entire sentiment shifted from total fear to overwhelming greed.
And this brilliantly illustrates the aftermath of that massive capital rotation. Wall Street reacted instantly. The Dow Jones shot up. The Nasdaq jumped dramatically. Technology stocks, which, they thrive in lower interest rate environments, went absolutely parabolic.
Cash that had been sitting out of the market due to fear just rushed directly back into major risk assets. I mean, the global stock markets essentially threw a massive multi-billion-dollar party to celebrate the fact that the worst-case scenario had been completely avoided.
Section 4. The India subplot. Foreign capital rushes in.
Now, while the world was cheering the drop in oil, a really fascinating subplot dropped in Asia at the exact same time, sending even more capital flying across the globe. Just as global investors were feeling flush with cash and optimism, the Reserve Bank of India made a highly strategic move. The RBI actually opened listed Indian equities to a much wider pool of foreign investors, and the timing? It literally could not have been more perfect. Global funds, now possessing a returning appetite for risk, spotted an immediate, massive opportunity. Heavy streams of foreign capital began flowing directly toward India. Consequently, the major Indian indices, the Sensex and the Nifty, climbed aggressively higher. So investors aren't just relieved about oil anymore. They're actively placing massive bets that India will emerge as one of the definitive winners in this newly unlocked economic cycle.
So, what is the ultimate takeaway here? Well, sometimes the biggest market moves don't start in stock exchanges. They start with a signature. This is the reality of modern finance. Trillions of dollars, entire national economies, and the retirement accounts of millions of people didn't shift direction because a company released a cool new product or had a good quarterly earnings report. No, they shifted because diplomats in a room managed to draft a peace framework. One peace agreement, one oil crash, and the entire trajectory of the global economy was rewritten in a single afternoon. Which leaves us staring at a very profound question. With oil down, cash flowing, and new markets like India accelerating, is this the definitive beginning of a massive new global bull market? Have we finally cleared the geopolitical hurdles for a new era of growth? Or, in our incredibly fast-paced, highly interconnected world, is this remarkable rally just a fleeting moment of calm before the next unpredictable storm hits? Because the markets never truly sleep, and the next big catalyst is always just a headline away. Thank you so much for joining me for this explainer. Keep your eyes on the data and stay curious.